Welcome. Thanks for joining us on Market Call. I'm Morella Fernandez. Hap Sneddon on the show with us today. He's founder, chief portfolio manager at CastleMoore Inc. He's going to take your questions on technical analysis. Here's how to reach us: 1-855-326-6266. You can also email your questions, marketcall@bnnbloomberg.ca. Hap, thanks for coming in.
Well, thanks for having me.
Let's start with the Bank of Canada and the U.S. Federal Chair announcing next week rate decisions. What is your expectation on both?
Well, I think everybody expects it's got to be 50 basis points, if a minimum 25 basis points.
In the U.S.?
In the U.S., yeah. Canada, we started early. I think we were the first G7 central bank. I think we were. I'm not sure exactly if we're going to follow suit, but we've sort of got cover now to kind of keep going along with the U.S. And it does put them in a bit of a bind, because it's just where we're at with in the economic picture right now. We've got something softening, but we've got these expectations of rate cuts, but we're also seeing some inflationary pressures kind of start to build again. So it's kind of boxing them in, I think, despite the U.S. President trying to jawbone it down. The Fed is notoriously late on things, but I think it is trying to be, in this case, to defend Powell a little bit. He's trying to be prudent to say, geez, this, I don't think they wanted to do this. I think they'd rather still wait, but the clarion, the sound is so shrill right now, they sort of have to do it. Okay, let's talk about why investors, or why you think investors are still so optimistic, piling into the market with record closes across North America, in spite of the weaker job data that's coming out and the stickier inflation. Well, if we kind of go back to February, where this all sort of started. It started right after the U.S. election, where we said, okay, these tariffs are coming. Then I think it was early in February. I remember looking at the futures, and particularly the FX, on a Sunday night, and the Canadian dollar was just getting crushed at that point, and it had kind of recovered from that. But the beginning of these tariff announcements, everyone was sort of absolutely, that's it. We saw a lot of prognostication in the media, analysts that by July we're going to be in big trouble. That whole sort of narrative got unwound. And so what's happened now is all these people that were worried about it are sort of coming in late to the market. If we look at the structure of the market right now, this is not the best time, in my view, because we've got a lot of historical technical September, October's historically weak. We've got some of the indicators overbought right now. So I think that this piling in is sort of missing out of these returns we've seen since April, and trying to push at the last minute. Now, having said that, we think there's some sort of corrective environment, as I alluded to, because of certain things in the offing. But whatever that correction is, whatever the nature of it is, how long, how deep, it's going to be ready to be bid at the lows and right after that. So I was going to ask you, are you then waiting to deploy money at this point? Well, in most of our portfolios, we're fully invested. Some that are tactical, we've got no choice but to sort of follow our rules. And it says, okay, our seasonal advantage portfolio, right now we're 30% bonds. And it's not a specific investor geared, it's not a specific portfolio geared towards an investor type. It just goes into bonds late summer, it sells those bonds early October. It's sort of a routine thing. And so what we've seen in the last few days is that bond position has done quite well. In the midst of these, as I said a minute ago, is these sort of cross currents of some inflation pressure sort of starting to come to fore, but you've also got some softening in employment and some company specific. The earnings are pretty decent still across the board. Let's take a quick break. We'll line up some phone calls for Hap Sneddon of CastleMoore Inc. Taking your question today on technical analysis. Here's how to reach us toll free, and also how to email your questions in. We're back in a moment. Welcome back. Thanks for joining us. Let's start with an email from Natalia, who says, please, your technical analysis on ARC Resources. I thought ARC might get a bit of a bounce from the announcement yesterday by the Prime Minister. I don't think that has happened, but we'll pull up the chart for ARC Resources. Oh, I missed that. What happened yesterday? Well, nothing.
So we'll. I mean, the construction stock's got to bounce. The engineering stock's got to bounce.
Okay.
But Arc Resources, which is natural gas, I thought might get a boost from that LNG pipeline announcement, but it hasn't seemed to. What do you think?
Well, natural gas is just such a funny, it's a funny commodity. Sometimes I want to call up the regulators and say, someone's looking at this, just the way the moves.
Funny how?
The price movements of natural gas are so erratic. We don't really truly have a global market. So where you have some, the LNG's trying to do that, right? Trying to create this global market or a global baited way to, provide this commodity across the oceans. But the domestic natural gas market is, it can move 5, 6, 8%, some 10% in a day. So it's a really weird market. And so I think natural gas, it can be company specific, but we look at ARC, what we do see on this 3-year chart is maybe a little bit of a corrective phase going on here the last sort of 6 months. And that would be just by this little break there, but I wouldn't read too much into that. It's got a lot of support. And because of the quality of dividend, it's going to have a lot of support sort of in this $24 range right where we're at now, maybe as low as $20. But the whole sector is actually starting to look quite interesting. It's going to be, I'll mention that one of my top picks will be sort of covering this space and energy. Okay,
so you wouldn't really worry about it moving forward. You said it might get down to about 20 before it bounce back up?
Well, that could be the downside, yeah. So pretty well bid.
All right, let's go to the phone lines then. Colin holding on the line in Sarnia, Ontario. Hi, Colin. What's your question today?
Yeah, good afternoon, Marilla, and good afternoon, Hap. My question is about TFI International, the 5-year chart. There is this amazing triple top and then a crash. Can I imply causation to actually, once you get a triple top, you're pretty much going to take a dive, or what do you think about that pattern?
Well, a triple top, if you look at what's been indicated by that pattern, and what he means is that a stock that's we've got Comfort Systems up here, not TFI, but when you have a triple top, the stock has tried to 3 times in this case try to punch to new highs. And so we're looking for TFI, the graphics on TFI.
Yeah, TFI, by the way, when you pull it up and have a look, it really did that deep dive at the start of the year, and it's gone sideways since. I know you're going to look at a longer view of it.
Yeah.
But it really has gone sideways and not recovered from the start of the year.
So what happens in a triple top, just to get to there we go. So what he's talking about is that right there. So
yes.
What happens is, there's always these war analogies sometimes, the vanquish, these lines, and if we cross this line, then so that's what's happened is, you exhaust the buyers each time this happens, and then they just can't quite do it, and then some kind of bad news. And it's, I don't know TFI exactly what happened. I don't follow the stock closely on a fundamental basis. But something happened there that when it came out of this sort of exhaustion pattern, it made it rather easy for it to sort of fall. So if you've exhausted buyers, you have some bad news that comes in, it might make that next move a little exaggerated because you've got no one left to sort of step in. And so, but when you look at this chart here, what you see is it's kind of come back into this congestion we saw here throughout 2021 and early 22, and that's where it's found some new buyers.
Part of that could be just tariffs, right? Their transportation, and part of that was they were going to move to the U.S., and a lot of people didn't like that, and that provoked a pullback in the stock.
Right. So excellent. So that was that whole move there that we. Sorry, I went back there to the control room, drew again on the chart, but exactly. So that's what happened. Now to put together the news in February, just shipping that's going to be decimated, and then we get that triple top move. And then it sort of makes that next move outsized, a little exaggerated.
Transportation itself has been pretty depressed.
Yes.
Is it something you had been invested in at all, or is it something you've left alone?
There's a bunch of areas I tend to, that I've never quite invested in over the years. And it might be because of my 32 years in the business, and certain sectors you just don't seem to make money on. Transportation is one of them. Airlines is another one. I've never been really big on car makers per se. There's a lot of, you have labor issues. You've got, development. So, the modern car world, when you have Teslas and the Birds and so on, Rivian's, that's a different kettle of fish because that's changing the structure of the whole thing. So, yeah, transportation was something that's got too many variables in there that make it a little challenging I think, to make money.
All right, let's go back to the phone lines, and Joseph is on the line in Montreal. Hi, Joseph.
Good day. Thanks for taking my call. Have fun to hear what we have to say about Baytex Energy. It's been catching a bid lately. It's been doing pretty well. A lot of the oil companies in Canada have been doing pretty well lately, Athabasca, Imperial, Suncor. But Baytex, I have my portfolio a little in the red, not as in the red anymore. But I think it has been so beaten down, even though oil has been in decline for the last little bit, like a year or something like that. It's been slowly going down. When you see such divergences in some of these commodity-based companies like a Baytex, how does one of yourself onboard this information? Because right now, I would think that it shouldn't be doing well because oil's slowly been trending down, but Baytex has been catching a bid lately. And I know there can be differences between producers and a commodity, periods where the producers do well at one point in the year and then the commodity does well at another point.
Sorry, I kind of heard him trail off a bit. I wasn't sure what his question was about it.
Yeah, I got Joseph's whole thread there. Just on his last bit, he asked about the commodities and the producers of commodities. So there is a relationship, but a lot of viewers, and if anyone's watched me on Market Call here, I've said this many times. Commodities and producers should go in the same direction, but it's always the producers that lead, because they're the smart people that know how to, what's going on with that commodity. Whether it's a gold mining company or a producer, oil extractor, whatever. But you always look at the producers for keys as to where the commodity is going to go. So if producers are quite high and they start to roll over, but the commodity stays high, you can bet the commodity is eventually going to roll over. Similarly, if producers start to rise up on a commodity that's sort of been beaten down, natural gas, Baytex, is then you look at Baytex for the guidance on natural gas we just talked about. So what he's talking about here is right now we've had this sort of downtrend that's a terrible channel. But we've got a downtrend here that's being challenged, and that's this action right here. If I did it another way, we hope this is a bottom that kind of goes back to 21, and it's a place to hang your hat here. That's another phrase I like to use, hang your hat. You're not sure about the future, but you think the worst is over for something, because you don't want to buy something with a great story that continues to fall and fall and fall. You got to change your story or whatever. You want to have something where you're interested in the story, then you start to see the price start to possibly confirm that. And so this is what Joseph was getting at, is that, in the midst of bad news, the stock is starting to be interesting. Those situations for me are the beautiful setup where the story's still a little negative, but someone's buying it, and the price action always has more information than you know. So it's trying to tell you something. There is interest there. And so in the case of Baytex, and again, back to one of my top picks later, is I'm seeing exactly that sort of same thing. It's a good risk at this point. You're not sure of the whole story or why it looks better, but the news will start to backfill, and then that's when you get the people that start to really jump on. And so Baytex would be an example of just that.
All right, we do have to take a quick break. We're going to line up more phone calls for Hap Sneddon, CastleMoore, taking your questions on technical analysis. Here's how to reach us. Back in a moment. Welcome back. We will go right to the phone line to Elliot. It's on the line in Hamilton, Ontario. Hi, Elliot.
Good afternoon. The property and casualty insurer Chubb has been range-bound for a period. According to the technicals, when it breaks, do you suggest it will break to the upside or to the downside? And at what price, if any, would you sell? Thank you.
Thank you for the question. We'll pull up the Chubb chart if we can do that and take a look at it. Chubb, what are your thoughts on what you've seen so far?
Great questions by Elliot here in Hamilton. What I like about Chubb here, and we own a bunch of insurers. We don't own Chubb. We own more on the personal side, but we also own the IAK, which is the whole basket of them all. But what I do like about the whole sector is this little pattern right there. I'm going to have to work on my drawing here today, is this little sort of pattern there, and that's quite positive. So if it broke that lower end, and if we look back at January, we had a low in this stock, Elliot, at around 252. So if it took that out, then I'd be worried that we are in this sustained decline. But when you have a pattern like we can see here on the screen, you have to expect the stock, just as it does, is going to kind of float in amongst that sort of pattern. So you get to the top range, and then it'll get to the bottom range, and so on. And so, at that break there at 52, I'd be a little concerned, but I'd also be really, really excited at a break above 302. So you can see we're at 279. So if we got to 302, I would probably add to this position. If I'm not quite sure, and I think it's going to break to the upside from that pattern, I would just take half my position. So if you wanted a 3% position, take 1.5% today. Just do it, and then wait for one of those scenarios. If it breaks through, you're not going to buy more. If it's going to get above that 302, you'll pay more to confirm that your idea was a good idea than trying to bottom fish.
Good idea. For that, let's move on to John from London, Ontario. Hi, John.
Hello, Marilla. Hi, Hap. Broadcom's doing really well. Revenue's growing, profits growing, setting new highs. Fundamentally, there's all sorts of good news in the past month, including a huge beat and then an alliance that they made with Microsoft. What do you think for Broadcom for another 1 to 2 years? Is there more blue sky for the Blackbird? Thanks very much.
Thank you for the question.
These callers know their stuff here. These are Bloomberg has some educated callers.
358.76.
Yeah, when you look at this chart, it's this scale here, it doesn't sort of do it justice. But when you see a pattern like that, and maybe this is why John called. You start to get that parabolic, and some things I'm looking at on my screen that we don't have here. Some of the indicators, and they're sort of like sine waves. They would just kind of go through a pattern like that. Overbought would be here, oversold would be there, but they are screaming, it's been overbought. But the thing about mean reversion, and that's kind of what we're talking about, okay, it's overbought, it's got to come back to some. There's no justice in the market. It doesn't happen that way. You've probably seen this. Is some stock keeps going away, and people, once that comes back, I'm going to buy some more of that, or I'm going to keep buying the stock on the way down, and it keeps going down and down, and so. I have caution with Broadcom just because of the parabolic nature, just because of that sort of the steepness of that pitch. What I would want to see is it kind of start to go sideways a bit, just like the previous chart we saw of Chubb. It's kind of go sideways a little bit. So if I didn't own this, I wouldn't start a new position here. I think there'd be a better way to enter the sector. If I did own this, I'd want to clip a little bit of it now and keep my base there, half of it, and go on.
How do you decide when you want to trim a little off the top? What do you look for? Sometimes it's like the advice you get from your mom or your grandma. Put a coat on. You've done really well in a stock. What are you waiting for? You can have I employ these same sort of common sense principles. If this stock has grown so big in my portfolio, and I'm trying to handicap when to do it. If you're starting to ask that question, that's probably the moment. And it doesn't rely on a technical read of it. It's just portfolio management as opposed to a fundamental analysis or a technical analysis. It's just common sense. This grown to 7% of my portfolio. Maybe I should clip this back to 3.5 and just look for another idea. So to me, it's about common sense and portfolio management. Maybe tax considerations, but to trim it and hold your base position is pretty good. Right. Let's go back to the phone lines. Jacob's on the line in Toronto with his question. Hi, Jacob. Go ahead.
Yes, good afternoon to both of you. I would like to ask your guest, please, about Brookfield management, please. It's either to sell it or just keep on buying some more. Thank you very much and have a nice weekend. Thank you.
So Brookfield Asset Management, we will pull that up. Is Brookfield, I know there's so many different Brookfields. Are any of them sort of under the umbrella of what you like, what you invest in? Absolutely.
This is a stock we do own. You can see a pattern there. It's kind of, that kind of a little bit of a basing pattern. It hasn't really gone too much. It had a little spurt at the beginning of the year, but then it's kind of gone sideways and not sort of participated the sexy parts of the market that have been, tech and certain other niche areas have done quite well. Anytime you can get some leverage, and one of my top names is later on is going to be just down the space. But you can get leverage in other people that are good at picking up investments, then why not get some help because they manage assets. In a nutshell, is what Brookfield does. They run some businesses, but they also have some assets they manage, and or they hold. And so Brookfield on this time frame, looks pretty decent. This would be, to me, it's a core holding. We own Brookfield, the parent company, and Brookfield Asset Management. And yeah, anytime you can stand on the shoulders of people that can see a bit further in this world than you in this space in investing, then by all means take advantage of them. Good stock to hold. Buy it today.
Sounds good. We hope that helps Jacob make any decisions he's making as we take a quick break. We're going to be back with past picks from Hap. Stay tuned. Welcome back. Time to have a look at Hap's past picks from October 9th, 2024, so almost a year ago. At the time, he chose Walmart for $80.40 US, and it has been up to today $103.84, so a 29% upside, a 30% upside with total return. Is Walmart something you've held on to, and why do you like Walmart versus others in that space, Dollarama, something like that?
Dollarama is pretty good. Walmart just executes really well. They know their customers really, really well. You're not going to get too many surprises. I think if you buy Walmart, you're never going to sell it. That's not a bad return, right? Against the
not a bad return at all.
And everyone understands Walmart. You know what they do, but they've got some massive upside. So we can just see, here's that little pattern. It kind of it's a little bit weak, but it kind of broke out of this little step, and then away we go to something new. But they are going to benefit immensely in this whole retail space from the adoption of AI. Probably more than any other. Our other big holding in the space is Costco, right? And places we all go. I never would have thought 3 years ago that we'd be doing some of our grocery shopping through Walmart, because it just makes it. I'm not shopping at Walmart. Their stuff is pretty good. Their produce is good. You can get it delivered right to the door. Things get delivered. It saves yourself time. So they really know their customer, and like I said, you're never going to sell it, unless it gets too big in time. But
how are they employing AI to help them?
To know their customers for ordering, but it's particularly on their customers' habits and that relationship with the stores.
All right, let's move to your next past pick from October of last year, which was Nutrien on the TSX. They were recommended at the time at 67.26. Moved up to 79.28 today, 18% upside here, 21% total return. Nutrien has definitely had its ups and downs over the last, since the start of the year, really. So to see it up is a good thing, but is it something that you trimmed at any point or pulled back
no,
on?
and this space was one that I thought of maybe making it one of my top picks, or sort of whole agriculture sector. There we see here quite a choppy stock price. You can see that it's been pretty volatile, but we've got a nice little trend here, and that's what you always want to see. Even if you've got these highs and lows, if you can see that you've definitely got just a general trend right through it, then it lets you kind of digest these highs and lows without getting too excited. If we pull it a bit further, we had a bit of a longer term chart there in Nutrien, and you can see what is quite attractive about it right now is it's coming out of this. What a crack team there! They're responding.
they're getting there.
It's kind of coming out of this base, and again, anytime you can kind of have a stock kind of come out of this base after multiple years, it makes it much more powerful, that move, and it lets you have a bit more patience. There we go, thank you. It lets you have a bit more patience with any kind of volatility you see in this early move, because this is an early move compared to all of this, right? There's a line here, or this period here was that basing that I've talked about a couple times on the show. You go sideways for a bit, it's negative news, but the stock keeps going sideways. That's actually quite positive, because they're looking past that news. It's sort of, the kitchen sink. You throw everything into some bad quarters, and but that pattern right there is pretty attractive, where you have that big downtrend and then the nascent uptrend starting. That's where you want to hang on and just be absolutely patient. Nutrien would be the example of that today. You could still buy this today and do well.
Okay, not a topic, but a top pick for moving on. Let's go to your last topic from last year, Constellation Software, very well-known name, also doing quite well. At the time that you chose it, it was 4,368. 03, and this is on the TSX, and now it's up to 4,399.95, so it is a 0.7% upside, 0.8% for total return. That's the 1 year, and again, pretty volatile.
Yeah, you can see quite volatile. These guys are fantastic at incorporating new companies. If we look at a long-term chart, this would be one that I would pick up again today, because we are at a discount. It hasn't participated as well. Canadian tech, there's only been a couple Canadian techs that have really done well lately. Shopify. The rest of the area is subdued. This is a name that I would definitely step into here. Well run, and they bring in new businesses. Their key thing. They incorporate them quite well.
How do you feel about the volatility? It doesn't bother you?
No, it doesn't bother me. You have to expect that for some good names, and you've got an appropriate ownership of it so that it's not going to keep you up at night. You have your 1.5% to 3%, whatever it might be. You have that, and then it lets you it lets you own volatile stocks if you have them the right weighting.
We are going to take a quick break then. We're going to be back with more of your phone calls and emails for Hap Sneddon. CastleMoore Inc. Technical analysis is what we're focused on today. We're back in a moment. Stay tuned. Welcome back to Market Call. Thanks for joining us. Moez is on the line. He is calling from Vancouver today. Hi, Moez.
Hi, thank you for taking my call. My question is about Robinhood. It has almost doubled in 1 year. And what does the chart say now about the future possibility? Thank you.
Okay, thank you for the question. 202% growth over 5 years, a lot of that coming in the last sort of year. Do you like Robinhood? I think people either sort of love it or hate it.
I've never owned it. It's sort of become a mature meme stock, I guess you could say. It's
graduated
to the sort of the senior seasoned meme, or whatever, and somehow it's got persistence. I mean, investors like this. What does always bother me, and what I can't help Moez on, the caller, is when you get something that goes parabolic, what do you do? How do you deal with that? Other than what I mentioned earlier about common sense. Do you own some? Are you up 200% in less than a year? Should you maybe sell some? We have a fair big holding of Palantir, so we understand when something really accelerates massively. And that's one where we've had to sell consistently. So if I own Robinhood, I'd be selling some of this today. It can easily, if we look at it from a technical basis, you can see this peak back in 21. Well, lo and behold, there was a peak there at the end of last year, end of 2024, right there. So to me, that would be the natural place that the price would migrate back to. Where did other buyers step in and out? Where were these other inflection points? We have this. It's like coming to a roadway where you go back in history. There was a lot of action at the corner of First and Main, and that's what this is. This is a roadway where there's action there, and to me, that's where it would come back. Now, if you held it right now and you didn't want to sell it, then I certainly would put some sort of a stop loss in to protect you a little bit there. But as to where it goes from today, no idea.
All right, we will hope that helps out Moez as we move on to Stanley, who is calling today from Ottawa. Hi, Stanley.
Hi. Questions on the TD Bank. It's had a good run. Not sure if that run will continue. Just reading the headlines about the housing market correction that we're having, and just thinking, is it time to take profits? Thank you.
TD has a lot to unpack, but I'd be interested in your technical analysis of it, because so much has been going on news-wise for this bank that when you look at the chart, what does that say to you? Well,
we've got a little bit of a breakout there. So if I'd come on a couple months ago, we're kind of right around here. Say we're whatever, let's call that $90, and we're kind of coming up to this previous high around $100 from end of 21. Early 22, I'd say, okay, that's going to be a problem. The same reason we just talked about Robinhood. That's a juncture here. Last time the stock fell from that level. Well, what happened here was, and why this is important today, is it broke out of that level. So once you break out, you're going to, you will start to usher in some new buyers. You'll have, less resistance. Less sellers, and so you sort of tend to get an upside from there. If I had TD Bank right now, and it was not a reasonable, it was a reasonable allocation of my portfolio, I would have no reason to sell it. We moved a couple months ago to a big overweighting on some of our portfolios in the financials. Historically, they have a pretty big upside this time of year, and so we are sort of anticipating this last bit of run here. But if I held TD, I certainly would just keep holding it. If it was overweight, then I would certainly look to trim it once this is done, maybe in December, this run. So a lot of concerns over banks, but the market doesn't seem to have any right now. And so follow the market and not hood yourself right out of overthink it too much.
Okay, that is for Stanley. Let's go to Chad, who's calling from Saskatoon today. Hi, Chad.
Good morning to you both. My question for Hap today is on Lululemon. Before the earnings, I thought something was special going to happen, and obviously it didn't. It dropped substantially from there. I'm in for about $204 cost average, or my average. Now it's at 161. It dropped again today. I don't have a huge position, but also don't want to lose any more money. I was just wondering what his opinion would be, and I'll hang up and listen. Thank you again.
Okay. You are in at 204. It's not too bad, all things considered. It was at 421, I think, at the start of the year. Let me have a look here. Yeah, 418, 419 at the start of the year. So
we're kind of right at a spot back in later 2018. We can't quite see it there, where this has kind of come to. So if we could go back, and the control commodities deals with, my preferred presets, 5 years and 6 months. So we're not expecting to see anything back there. But there's a spot there where this is sort of stopped at, and that's at this sort of 160 level we're at right now. If I saw further erosion here, then we're probably going to see it kind of hit to, we'll probably see it kind of get to around $80 range if we kind of fell from here. Now, interestingly enough, the whole space, the whole retail space in clothing and activewear is starting to get interesting right now. You're starting to see some analysts pick up their interest on Nike and Under Armour, and so it's been rough. There we go. Yeah. So thank you. Fantastic, guys. So it's come right back to that spot right there, and that's where we are today. So if it broke that, that's where I get the idea that we're going to kind of come into around the $80 range. We're going to have some head resistance at this level, so probably around the $200 level as it fights through all these touch points that we saw at that level.
So he bought at 204, he's saying. Would you recommend or suggest to him that perhaps he lighten the load on that?
No, I would hang on to that. I would lighten the load if if he's got a reasonable position, then I would lighten the load if we don't hold if we kind of get into the low 150s, I'd probably say, take your tax loss, use that for the other investments you've probably done well on, and come back to that, wait a bit, maybe go into another space, take your tax loss. Go into another name. There's probably a bunch of other ones, not as maybe dramatic as Lululemon, but they've been beaten up a bit. So you can take the tax loss on that one and move to the next, stick with the space for that upside that I've talked about that they're starting to get interested in.
Okay, we will take a quick break. Hap is sticking around to answer more of your questions when we come back. Stay tuned. Welcome back. Anne has been waiting on the line in Scarborough with a question. Hi, Anne.
Hi, Hap. I'm contemplating dipping my toes into Russell Metals. May I please have your technical analysis of the stock, and is it a buy? Thank you.
Thanks, Anne. So Russell Metals at 41.56 today, which is a little bit lower for it, obviously. When you have a look at that chart, is that a point where she should buy in?
Well, it depends. If we could narrow in this, I mean, we've got a decent chart. So the overall thing I want to say is yes, and we've got a space that is becoming more interesting. One of the top picks that we'll get to shortly, but I'm going to be talking about this again. This whole space is getting interesting. The part that is a little, not concerning, but you just want to pay attention to, is this last little bit. And what this, what this whole area here is another example of that range we've seen a few times, right? So it gets to the top, and then it sells off. It comes to the bottom and goes up. So there is the possibility that it's going to get to this lower band, which I'm going to call around $35, okay, something like that, that it could get to. So what I would recommend, Anne, is yes, I like this space. If you like Russell, go ahead. But buy half your position today, and if it migrates back to that lower end around 35, and it holds. Now I don't like to average down, but if it holds in that level, then you could buy your second part. Certainly if it gets to that upper part of that range, if it kind of breaks above $47, then do your other half. So I'm giving you an either or. Either one of these spots, so a breakout through there, not to touch, or a hold there, not a breakdown, then it certainly would be comfortable having this long term. So buy half of it right now and take away the guesswork and buy the other half under the two conditions.
Okay, let's go to John, who's calling us from Burlington, Ontario. Hi, John.
Hello, hi. Thank you for taking my call. I invested in both Tourmaline and ARC Resources. You already covered ARC a little bit earlier, so I'd like to know your opinion about Tourmaline. And one little question, please. Did your earlier analysis of ARC Resources take in consideration the huge trading volume that happened in the last few days? Thank you. Thank you.
Okay, let's...
No, we didn't talk about the volume, but volume generally is a confirming indicator. So when you get a lot of volume and you've got bad news that holds, that's kind of positive, right? Or you similarly, as we drew before, on a couple of the charts, if you break out of a congestion area with a lot of volume, that means you've got a lot of commitment. So volume is usually a confirming. If you've got a breakdown on a lot of volume and there's no place to hold, it keeps going, well, then that's a negatively confirming indicator. So volume is quite important. But I own Tourmaline. We've got a small position on it because we really believe in it. This 5-year number has been pretty good. But what I was interested in is this sort of basing pattern here. And I know that, this is one I think is going to do quite well for investors. When will it happen? I'm not sure. Do we need a positive energy environment? Yeah, we do for sure. But I'm pretty convinced that Tourmaline, which is well run, is going to be taken out one day. I never screen calls. I can take lots of calls. But Tourmaline is one just a little dear to my heart. So when a caller came in with it, I was like, well, sure, I can talk about this one for sure. I know it pretty well. Really well run, great balance sheet. It's been pretty volatile. It's kind of gone nowhere for that period that I'm showing you right on the chart there on your TV screen. But at some point, you're going to get rewarded. If we do break below that sort of that $50, maybe I'm a bit early. Maybe we then come to this level there, probably around 45, 40. But this is one that should be held long term with the idea that it's going to pop one day and you're going to make a decent amount of money.
All right. We hope that helps. John, as we go on to Scott, who's calling from Brooklyn, Ontario. Hi, Scott.
Hi, how are you? Thanks for taking my call.
Go ahead.
Just wanted to get your thoughts on BCE and why the PE ratio seems to be, I guess, high compared to its peers, TELUS and Rogers. Thank you.
Thank you for the question. I should say BCE, the parent company of this channel under the Bell Media brand. Stock has struggled for a little while. It's kind of broken out a little bit now, up to 33. What's your take on BCE?
Yeah, I can't talk to Scott's take on the PE ratio, but that would really, the fact that it is worse, as he said, is sort of an indication of this. To me, there's no reason to own this stock, yet. Although we are seeing, a nascent little bottoming pattern that's sort of kind of occurring here, where you've got a previous high, then it kind of, in the short term, it comes down, makes a new low. And then, you start to make, so this is sort of the opposite of that triple top. It could be sort of called the double bottom. But right now, this whole sector in Canada, the U.S. is a bit different. But anywhere in Canada, this space does not interest me until you start to see a bit of a base. You can see this is multiple years, peak back in late or early 2022. So right now, there's nothing that gets me going on. I'd want to see it go sideways a little bit. I know it's got a great dividend, but you don't want to hold a dividend at the expense of losing some capital.
When does it get interesting to you?
Well, if we see this behavior here just start to go sideways a bit, right out into next year, then I'd say, well, you know what, I'm okay as long as it if it flips around or moves around between a band and I'm getting paid a dividend, and then one day it's going to break out of that band, get more interested buyers, as we've talked about. Why do they come in? Then I'd say, you know what, my dividends, I'm okay holding it. But when they, to hold a dividend, hold something because of a dividend, when you lose the capital, dropping in half, right, $80 down to below that, then to me the dividend doesn't matter, right? The dividend it's important. Dividend is important, but it can't outweigh capital erosion at that. So it goes sideways, then I'm interested in it. I'll hold the dividend, or hold it and just collect the dividend until it starts to get more interesting.
All right. We are going to take a quick break. We are done for phone calls and emails today, but Hap will share his new top picks when we come back. Join us Monday for Market Call. Julian Nono-Wandim will be on the show, Vice President, of Equity Analysis from Goodread Investment Counsel. He'll take your questions on U.S. equities. Time now for Hap's new top picks. You're going to begin with Onyx Corporation on the TSX. Onyx Corporation, asset management, I guess, also private equity. What do you like about them?
Well, as I touched on with Brookfield, why not get other people to, lend their expertise at what's good out there, particularly at junctures where you've got volatility, you got maybe the market's down 10%. You've got people that can go pick up assets, and as you said, these guys are. They've got private equity and general assets, and they've struggled a little bit. You can see this. It's not been. It's really kind of gone nowhere for a fair bit of time. But this latest move here to me is quite positive. And the fact that we've broken out here above that $100 again gives me a place to sort of hang my hat. The big thing about getting someone else to help you with the decisions, you get this leverage. You get somebody else to add new names that you wouldn't have bought, right? So, if you go to Onyx's website, you can kind of go look at the companies that they all own, and you might recognize a few of them, but they're pretty global. They're sort of the mid to lower, private companies, just companies that you wouldn't get exposed to. So how do you get exposed to private equity? And this is one of the ways to do it. Get someone else as a professional to do that. And their stock is just sort of breaking out here, so.
That's your first topic. Let's get to your second then. Pembina Pipeline is your second, very well known. We get a lot of calls, actually, and questions about Pembina and how it's doing. What do you like about Pembina? PPL on the TSX.
Well, the first thing I like is the technical picture. Is that when we pull out a little bit, this downtrend here to me. Whoops, there we go. Yeah. So this little, we've got a nice trend there. We've kind of gone sideways. That's the theme I've talked about today. We've gone sideways here. A break above that, which I expect to happen, maybe later in the fall, is quite positive. It, the dividend on it's 5.26, which is not too bad. So back to we're talking about BCE. You don't mind owning a story like Pembina. Will we see some new highs? Yeah, I believe we will. Here's my analysis. They're in the right space. The next top pick will kind of get right into that sort of whole commodity space. We talked about it with Tourmaline. We talked about Baytex. This is a good risk to reward right now, and you're getting 5.26% to sort of take that risk. If it broke below that lower channel that we had up there earlier, then I'd say, okay, something's wrong with the story. But when you start an initial position that's reasonable, that's the risk you take. Maybe I'm going to be wrong. I'm not going to be adding here. I'm going to be wondering, am I too early? But Pembina, all accounts, especially because of its exposure to a space that I think has been beaten up a fair bit, and I think will be surprising people where we get to with energy.
I was going to ask you where do you land with your forward look on energy in general? We know oil sort of has hovered around the $60 mark. There are questions we talked about natural gas, which has been sort of lowered as well. Questions about how quickly we get it to other markets. Where are you landing on energy?
Yeah, it's been really lumpy. I think that's what you're sort of saying. It's just been kind of lumpy. It's been very prone to geopolitical stuff, a little bit less, but I think in the initial Ukraine war, flared up a little bit. The U.S. is trying to push hard now on India and Modi and say, look, we don't want you buying any more Russian oil. Yep. We know, and as I'll touch on later, is that there's been when you get these lumpy, depressed periods, what happens is all these producers, we talked about them earlier, they don't go out and drill new wells. They don't go out and look for new mines. And so everything kind of clenches, and then any bit of upside out of that lumpiness, you're going to get this positive move because there's no more production coming on stream. Everyone's sort of tightened up. They're not going to do it at these prices. Why would an energy company go out and start drill for new wells if, the downtrend is we're seeing oil go to $40? They wait. So the more you can get sort of a bid happening, a lot of negativity, and you start to see these producers start to act a bit better, then the commodity eventually will come along, and because they're the smart users of those commodities. They know it better than futures traders and everyone else who sort of has a tangential relationship to it. If you're mining or producing these commodities, you have a real understanding of them. And once you see them start to move, these producers, then that's a good indication. I think we see that with Pembina. Now, its exposure too is limited to the flow through, so it doesn't have as much hard asset exposure, right? Yeah. So Enbridge, I was thinking making an Enbridge a top pick as well.
Okay.
Yeah.
Good to know. Let's go to your third pick, Invesco DB Commodity Tracking. So it's an ETF. And what's included in the ETF? Why did you choose this one?
Well, what they do is they sort of follow this index and weight the different units in there. So right now, this one's got a lot of with the whole universe is all commodity futures related to oil, natural gas, metals, and agriculture, and they'll weight those things differently based on what's kind of happening out there right now. It's got a pretty big allocation to oil. Gasoline, all the way down to commodities, soya, corn. You're going to get exposure to base metals, copper. And what this does, you can see it's a bit of a lumpy, but we've got this trend there since the beginning of last year. And what this does is this is sort of a hedge against. We started off the top of the show with this quandary that central bankers are kind of in, where we've got unemployment a little bit lumpy. People calling for more rate reductions, but then you could see some of these pressures in inflation sort of not kind of going away. The last couple of days, we've seen a few things start to tick upwards. And so this is your counterplay. And because, if we saw a breakdown from here, then, we would say, you know what, it's time to exit this. But the upside and the potential hedging is so awesome with this right now. It's worth the risk.
All right, Hap, I got to leave it there. We're out of time. Thanks for your time. Thanks for coming in. Have a good weekend.
Thanks for having me.
Thank you for watching Market Call. We'll see you again on Monday.